Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. We can notice how the market has been creating a series of monthly higher highs and higher lows, which is the definition of an uptrend, and all this push to the upside is fueled by strong institutional buying. And we will be speaking about that in just a few moments when we move to the commitment of traders analysis. But for now, let's keep this in mind and also notice that all this uptrend is actually coming and starting from a major break and retest and rejection to the upside from a strong historical structured zone. In fact, what we know is that this level was the previous zone from which all these rejections to the downside were created. Every time the market tested this zone, it got rejected to the downside quite aggressively. And then we had the breakout to the upside with this impulse. And what we know is that previous resistance, once it is broken to the upside, becomes support. And the market here went and retested that previous resistance turned support and is currently still in the process of rejecting the level to the upside. So here in the monthly, everything seems quite bullish and more bullish price action could be expected away from this area with the continuation and creation of new monthly higher highs and higher lows. Dropping down on the weekly time frame, the price action also here on the weekly is quite clear. We can notice how initially we had a strong push to the upside, then the market formed this consolidation pattern. In this case, it was in the form of a triangle formation, also often called a wedge. And after that, what you naturally expect is the breakout to the upside. So essentially, it's a very common impulse, consolidation, and then impulse pattern to the upside, in which essentially in the consolidation, the market is creating lower highs and higher lows at the exact same time. And then you have the breakout to the upside, which is exactly what happened here. After that, we have seen a very similar pattern to what we have seen on the monthly. So essentially the establishment of an uptrend with the market printing these weekly higher highs and higher lows. Now, the last move was a correction to the downside. The next logical step would be the creation of new weekly higher highs if this uptrend is to continue. Dropping down on the daily time frame, what do we see? Well, here on the daily, I did speak about gold just a few days ago when the market was around this area. I explained all the reasons for which I was expecting this correction. And then when the market reached this strong demand zone, I made another breakdown just 2 days ago explaining all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description those two previous analyses so you can go and check them out for more free education. But before we dig deeper into the technicals here, first, let's go and see what we have when it comes to the commitment of traders and how the big players in the market are positioning themselves. Now, if we look at the data for gold, what we can see? Well, first of all, in the long term, we can see how they are aggressively positioned to the bullish side of gold. We can notice 240,000 longs compared to only 77,000 shorts from an institutional perspective, with 163,000 net positions. So clearly aggressively bullish in the long term. But in the short term, we do see a decrease. We went from 249K down to 163K net positions. Now, this is coming from aggressive profit taking. In fact, institutions are starting to take profits on their longs, closing first 12,000 longs with the previous report and now 18,000 longs. So as this huge push to the upside essentially developed, institutions have been in massive profits and they're taking profits on those longs. This could trigger some short-term weakness, especially if the market will reach this previous level of supply and resistance. Because from here, this is where the previous rejection to the downside actually originated. And there is definitely the possibility at previous highs to see more institutional profit taking, which at that point could easily trigger some short-term weakness here for gold. Especially if the situations of uncertainty that we're currently seeing around the world, which are also driving this rally from a fundamental perspective, starting to loosen up a bit, and we start to essentially go again risk on. Now, if we will see a retest of the supply and resistance area, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. But when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description. Now, back to the analysis. So in a situation like this, if the market would shift from an intraday bullish to a bearish market, inside of the supply and resistance area, I wouldn't be surprised to see a potential reversal lower for some short-term weakness. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.